idea.
Okay.
Okay. I'm going to Senator McKim.
Thanks, Chair. Does the RBA have any evidence that there is an increase in demand in the economy?
The evidence is price pressures mainly coming through.
That could be supply side though, couldn't it?
It could be, but it's not all supply side. So we can identify what appear to be supply side issues. We can also identify, because it's demand relative to the supply, and we do know that, for example, we know that there is a very tight labour market, that there is a shortage of labour at the moment, and demand for that labour is very strong.
Unemployment going up, forecast to go up?
It is forecast to go up, and the reason it's forecast to go up is partly because interest rates are rising.
That's right.
And it needs to go up in order to slow demand.
ABS figures last week had retail sales growing at 2%, 0.2% in the month of September. That's a fairly weak rate of growth. Doesn't that indicate that demand is actually not driving inflation at the moment, and that what we are talking about are supply side issues?
It's basically demonstrating that, and it's only one piece of information at the moment, but it's demonstrating demand is slowing. We do know that demand has increased dramatically. We've come out of the pandemic really, really strongly. People are spending lots of money, and we know they're spending it on services and they're spending it on clothing and footwear. These are things that are under price pressure at the moment.
So the RBA's put up interest rates for 7 consecutive months. Prices are still going up. Now, I know there's a lag, but when are your interest rate rises, which you've left open the opportunity for more into the future, when are they actually going to stop prices going up?
Well, we don't know, and this is the uncertain world we live in. What we've done is increase interest rates a substantial amount, as you mentioned, over a short period of time, to get it from interest rates from a very low level, an emergency low level, where we were taking out insurance, to a level now that is getting up to where maybe there might be an opportunity to sit and wait and look a little bit about what's going to happen next. And so we've got to that point. We think interest rates probably still have to go up a little bit further, but we're not set on our timing and we're not set on the amount.
So that was what I was going to ask you, Ms. Bullock. I mean, it looks as if demand for actual goods is quite low based on retail sales growth figures. There's obviously a lag between interest rates and prices. I think you'd probably acknowledge that. You've got, according to the RBA, you're forecasting inflation to sort of peak this year and then come down. Why isn't the RBA taking more of a wait and see approach rather than engaging in, a very significant series of interest rate rises, which is, as we've acknowledged, hurting a lot of people in the economy?
So the forecast that we've got of inflation peaking and coming down is predicated on basically a market path, a sort of a path for interest rates which continues to go up a little bit further. So this is the best we've got, and as I said, there's a lot of uncertainty. You only have to look at our forecasts in our outlook, the Statement of Monetary Policy, to see that there are substantial bands around this. But this is the best we've got, so that's what our forecasts are predicated on. So if we don't follow that path, then that will have implications for the forecasts.
So I'm just trying to understand this. I mean, you've just said that demand is slowing. Is that right?
Well, no, I said the one number you have quoted is so far the first sign we have seen in the data that demand might be slowing.
So you don't think there's enough evidence to say that demand is currently slowing at the moment?
We're hoping it might be slowing, but we need a bit more evidence to see if it is slowing.
Thanks. So I read your speech from last night, and I noted with interest some of the comments you made around wages. So we spoke a little bit about this earlier, but can we just be clear? Do you accept that wages are currently not driving inflation?
I accept at the moment wages are not increasing at a level that is driving inflation.
So wages, which are growing nominally but declining in real terms.
Yeah, that's
Yep,
right. Nominal wages at the moment are rising more quickly than they have done in the past.
Yes, but still below inflation, right? So they're declining in real terms.
Yes.
They're forecast to decline in the budget for another year, correct? And over the 4 out years of the budget, net is a flat line, right? Declining over the first 12 months, but at the end of the 4 budget out years, real wages are going to be exactly where they are today, right? That's the budget forecast, correct?
I think our forecasts have for real wages actually to be rising a little bit, but
so your forecast is different to the government's budget forecast?
We don't have the same forecasts as the government, so... But they're not... Basically, they decline, and then in the out years, they start to rise again.
Understood, but the budget forecast nets out after 4 years at no change to today.
I accept that's the budget forecast, yes.
So can we agree that wages are currently not driving inflation?
So inflation is a nominal thing. It's not a... Unit labour costs are what is going to drive inflation. So basically, if nominal wages are rising in a way that means the unit costs for producers are going up, then that's what's going to drive inflation.
Look, I was really interested in what Governor Lowe said last week about the importance of avoiding a price-wage spiral. Now, I actually don't take issue with the importance of avoiding a price-wage spiral. Just to be clear, a wage price spiral. I don't take issue with the need to avoid a wage price spiral. But Governor Lowe's basic argument, as I understood, which I found to be incredibly circular, was we've got a high level of inflation, real wages are declining, there's a lot of supply stuff going on. I agree with that, by the way, that there is a lot of supply stuff going on. But he's worried that an increase in prices might lead to workers making more wage claims, and therefore we've got to keep interest rates high in order to respond to that danger of a wage price spiral. Now, that's a pretty circular argument, isn't it? I mean, if you can make the case now that you need to guard against... When real wages have been declining for the last 2 years, forecast to decline, we're in the middle of a 3-year decline in real wages. If the governor's going to make a case now that we have to guard against the wage price spiral, you could say that at any time, couldn't you?
So I think the way
when would we not be worried about that? If you can make that argument in the middle of a 3-year decline in real wages.
This is partly about trying to have wage growth and growth of prices, inflation, all consistent with the inflation target over the longer term. Yep. So ideally, yes, we'd like to see real wage growth. That's going to come fundamentally from productivity growth over the longer term. But the risk is, if inflation expectations in the short term were to persist and move into longer term high inflation expectations, then workers would seek to have higher nominal wage growth, and that could become inflationary.
Of course.
We're not saying it is now.
No.
So let me put it slightly differently. What we want is a rate of inflation and a rate of wage growth that is rewarding workers for productivity improvements.
Real wage growth.
Real wage growth that is rewarding workers for productivity improvement, but prices and wages growth that basically is low enough that it's in the background and it's not influencing and introducing uncertainty. What we've got at the moment is, as you point out, there's a big supply element in this. We've had a big shock to the price level. That results in inflation. But if we can stop that from winding its way into a more permanent prices and wages, then that is actually the optimal, because that is what will generate a strong economy and strong employment growth. If you move out of that zone and people start worrying about prices and wages, we know that that is not good for business and it's not good for workers.
Can I just be clear? what I understand the RBA to actually be arguing, based on Governor Lowe's comments last week, is that price increases, which I think you've acknowledged are caused in part by interest rate rises that the RBA has delivered, that those price increases are going to lead to wage rises, which the RBA then will use as the justification to raise interest rates. Have I got any of that wrong?
Yeah, I'm not sure the first bit was quite right.
So you don't think the RBA putting up interest rates
leads to inflation?
You don't think that's inflationary in any way?
No.
So if you put up so you don't. Okay. So if you put up interest rates,
Senator McKim, do you want to just ensure that you ask a question and just noting that you are at the end of your time block? But please, if it assists you to ask one or two more questions, that's fine. That's fine.
I appreciate that. So when you increase interest rates, what happens to the price of food?
Well, the price of food actually is probably an example of where supply and demand and, for example, the recent floods and so on, these sorts of things, price of food moves around a lot, particularly fresh food. So it's very volatile.
Are you arguing that increasing interest rates does not lead to an increase in the price of food?
Not in a sustained point. No, it does not lead. Increasing interest rates does not lead to increased inflation.
No, I'm asking about the price of food.
No,
doesn't. So anyone in the food chain who has a debt will see their costs increase, right? If you put up interest rates. So how does that not lead to an increase in the price of food?
They'll also businesses, and they tell us through our liaison, they anticipate with rising rates, future demand will be lower than otherwise, which gives them less scope to put their prices up. They have to do their very best. Yeah, but they have to do their very best to absorb those
in their margins.
by either generating productivity, reducing their margins.
So you don't think anyone in the food chain will put their prices up if their costs go up?
The main thing I think that affects the interest rates is part of it. If they have debt, but there's other more important factors that will influence the costs of, and workers is one.
Sure.
So harvesting, all those sorts of things. So there's a whole lot of things that go into the cost base. Interest rates, if you want to take a step back, raising interest rates does not increase inflation. Ultimately, what raising interest rates does is bring demand down and it lowers inflation.
Okay.
Thanks. I just want to go back to the issue of food, if I might. Is it your evidence that when the RBA increases interest rates, that has absolutely zero effect on the price of food?
No, I'm not saying that.
Okay.
What I'm saying is that when the RBA increases interest rates, it might have an impact, as you say, on those that have debt. But it's not the only impact on costs of people who are producing food.
Understood.
And it's quite likely that, in fact, the other cost pressures are much more important than rising interest rates. So it's not rising interest rates that are driving the increases in the cost of food, it's the other factors that are driving it.
Do you accept that when the RBA increases interest rates, that puts an upward pressure on food prices?
It might, but again, it depends on the debt levels.
Of course.
If they have,
I'm just
if they
asking
have no
about
debt,
the effect of interest rate.
If they have
rises.
no debt, it doesn't impact them. If they have some debt, yes, it does increase their costs, but by far, other costs are much more important, I think, in that process.
But the other point, which is what I was trying to say earlier, was those are the direct effects. The indirect effect, by working to suppress demand, higher interest rates, will broadly bring down inflation of all goods and services, and food's an important part of that.
So are you saying that increasing interest rates will reduce demand for food?
For discretionary food, yes.
Yeah. Well, see, this is the point, isn't it? Because for a lot of people, food is not a discretionary spend, right? And for poor people, they spend a much higher percentage of their income on food, right? So what you are saying, I think you've acknowledged that putting interest rates up does have an impact on food. You've said there are other impacts, I accept that, but it does have an impact on the cost of food. How's it in the interests of the economic prosperity and the welfare of the people of Australia to put the price of food up.
But what we're trying to do is actually reduce inflation of all goods and services,
Yes, but you've just
including
agreed
food.
that it's putting the price of food up.
No, a small
A small increase in the price of food for a lot of people is a very significant
Senator McKim,
matter.
could you allow an answer to occur?
Yes.
Yeah. But it's a small, direct, incremental effect for some producers who might have large amounts of debt, whose interest rates are going up. But for everybody else, the bigger effect is a weakening in demand, which will help to keep a lid on and bring down inflation of goods and services.
So poor people have to starve in order to get on top of inflation. Is that what you're telling us?
By far, no, not at all. By far the worst outcome for those people is if inflation gets out of hand, because we know that inflation will impact those people the most, and it won't just impact food, it will impact everything. So you can't just focus on the narrow aspect of food, you have to consider, as Chris said, the broader economic implications of this. And really, if inflation gets out of control, the people that will suffer will be people at the lower end of the income
And there's
spectrum.
no better way to tackle inflation than to put interest rates up.
That is the most appropriate way to tackle inflation, yes.
Tax reform wouldn't be a better way? Maybe
that
walking
might
away
be
from
able-
the stage 3 tax cuts.
that might be
They're
able to
very
help.
inflationary, aren't they? Or they will be very inflationary when they come in, won't they?
I have no
You don't think
particular
spending
view on
a
that.
$250 billion on tax cuts over 10 years will be inflationary?
Depends on what else they do aside from that.
But all other things being equal, they will be
but all other
inflationary.
things are not equal.
But all other things being equal, the stage 3 tax cuts will be inflationary, won't they?
They could add to demand, yes.
They will add to demand.
But
It's $250
all
billion
other things
extra
are
dollars
not,
in
all
the
other things
economy.
are not equal.
Thank you.
Do you-
Thank you.
last
Just
question.
one question,
Yep,
Senator
thank you.
McKim.
Does the RBA, what's the RBA doing, if anything, to understand whether corporate profiteering or corporate price gouging is playing any role whatsoever in driving inflation?
So we do a lot of business liaison, obviously, and in that process we talk with large businesses and small businesses. I think a couple of things. One, there isn't actually a lot of evidence in profit, apart from mining, which is doing very nicely, thank you very much at the moment.
My word.
I don't think more generally there is a lot...
Super profits tax now, I'd suggest.
Where would we be without coal?
Sorry, Ms. Bullock.
Nick.
I don't think there's a lot of evidence that there is lots and lots of profits being made by companies in Australia. In fact, the equity market would suggest otherwise. They're quite disappointed in some of the profits. Share prices are going down. The other point I would make is that a lot of the demand here at the moment that we're seeing is in services, it's in food and clothing, and there's a lot of small businesses in this. Small businesses are not profiteering. They are in a very competitive market, and I don't think there's any evidence at all that we see either from our liaison or from the data that small businesses are profiteering from consumers.
Okay, thank you, Senator McKim.